Silver built the Roman Empire. It powered the first global trade network. It fueled the Spanish Empire for 200 years. And in 1971, someone decided its price needed to be controlled. For the next 50 years, the paper silver market traded volumes implying 5 to 10 billion ounces per year, against just 800 million ounces actually mined. That math doesn't work, and in 2026 it's finally breaking apart. Gold gets all the attention, the gold standard, the gold price, the gold rush. But throughout most of human history, silver was the money that actually ran the world, not gold, silver, and the story of how silver went from the foundation of global civilization to the most manipulated commodity market on earth is one of the most extraordinary and least told stories in financial history. Here is a fact that almost nobody knows. For 2000 years, more transactions were conducted in silver than in gold. More empires were built on silver than on gold. And the world's first truly global trade network ran entirely on silver. The Roman denarius was silver, not gold, the coin that financed the greatest military machine the ancient world had ever seen. The coin that paid Roman soldiers, built Roman roads, and funded Roman temples was silver. When Rome debased the denarius, replacing silver with bronze, the empire began its long collapse. Fast forward to the Vinti Familetes, Spanish conquistadors discovered Cerro Rico, the rich mountain in what is now Bolivia, the largest silver deposit in human history. And that silver powered the first truly global economy. Spanish galleons carried silver from Potosi across the Pacific to Manila. Chinese merchants traded silk and porcelain for silver. The silver flowed back to Spain, to Amsterdam, to London. For 150 years, Potosi silver was the oil of the global economy. Every major empire ran on it. When the mines ran dry in the early 1620s, the Ming dynasty collapsed. The Spanish Empire began its long decline. The global trade network of the 16th century broke apart, all because the silver ran out. Now, fast forward to 1971, Nixon ends the gold standard, and something very quiet happens to silver, something that most people have never heard about. Before 1971, silver had a fixed monetary role. It backed coins, it anchored currency systems. Its price was managed, but within a framework that acknowledged its monetary value. After 1971, silver became officially just a commodity, like copper, like zinc, and a new market emerged to trade it. Paper, silver futures contracts, ETFs, options, derivatives, financial products that claimed to represent silver without necessarily holding silver. Today, according to analyst Nomi Prince and others tracking the market, the silver ETF SLV trades volumes implying 5 to 10 billion ounces of silver per year. But the entire world only mines approximately 800 million ounces per year. The paper market is trading 6 to 12 times more silver than physically exists every year. And this matters because the paper market sets the price, not physical supply and demand, not the actual cost of mining silver. The price is set by contracts that may represent silver that doesn't exist. And then in Minehead Edit, two brothers tried to fix this, and the establishment made sure they would never try again. The Hunt brothers, Nelson Bunker Hunt and William Herbert Hunt, two of the richest men in America, who decided to corner the silver market and almost succeeded. In the late 1970s, Nelson and William Hunt began buying silver. Physically, not paper, real silver stored in vaults, shipped in private planes. By early 1970s, they had accumulated an estimated 100 million ounces, roughly a third of the world's entire above-ground silver supply. Silver had risen from $6 per ounce in 1979 to $50 per ounce in January 1979, an 850% increase in 1 year. The establishment panicked. The commodity exchange changed its rules mid-game. New regulations restricted silver futures purchases. Margin requirements were dramatically increased. Investors who had bought on leverage were forced to sell. On March 27, 1970s, a day known as Silver Thursday, silver collapsed from $21 to $10 in a single day. The Hunt brothers lost an estimated dollars net meant $1 billion. They eventually declared bankruptcy. The message sent to the market was clear. Don't try to corner silver, don't try to expose the gap between paper silver and physical silver. The system will change the rules to protect itself. And for 40 years, the paper silver market continued. But in 2026, something has changed. BRICS nations are accumulating physical silver. China and India, the two largest silver consumers, are moving toward physical settlement. The paper silver market is trading volumes the physical market can no longer support. And as Nomi Prince noted just days ago, the paper silver market is dying. And when it breaks, the price discovery that emerges will be unlike anything the silver market has seen since 1980. Silver built the Roman Empire. It powered the first global economy. It financed the Spanish Empire for 200 years. And for the last 50 years, its price has been set not by the physical reality of supply and demand, but by a paper market trading volumes that are mathematically impossible to reconcile with actual silver in the ground. Every empire in history that ran on silver eventually faced a reckoning when the silver ran out or when the silver's true value could no longer be suppressed. The Ming Dynasty, the Spanish Empire, the Roman denarius, history suggests the reckoning always comes. Subscribe to Empire Collapse because the most undervalued metal in history may be about to remind the world why empires were built on it.